to show me how to do it. And we're live right now, but it's fine. Like no one knows. Oh, hey y'all, weekly Twitch stream. I'm Lewis at Money Positive, and I'm here with our first ever special guest, Phil Seibel from Advanced Benefit Solutions. I've known Phil for years. He helps a lot of our clients with their life and disability insurance. He is passionate about insurance. He's really We've worked with him for a long time. We've sent a lot of clients over his way, and he's just exceptional at helping people understand their policies, why they would want one, how much to get one, because insurance is such a mystery. Most of us have no reason to have ever dealt with it until we need it. And so Phil, we were having lunch with Phil. We just ate some hot dog spaghetti.
We did.
Yeah. And he popped over to introduce himself and teach us a little bit about the different types of insurance policies and why you might care about them.
Thanks for having me. This is great. This is a lot of fun. You're right. Impromptu. This is probably the best way to do it. No time to think and over. You stress yourself.
Oh yeah.
Out.
If I had told you hey, we're gonna record.
I would have thought of all these notes. Yeah. So this is great. But yeah. So firm is Advanced Benefit Solutions. I've been in this business for 15 years, and really the core of my practice has been supporting financial advisors across the country with their high earning, high net worth clients, or just any client for that matter, doesn't matter, of life insurance, disability, and long-term care. Most of my work revolves around that. I don't spend a lot of time on annuities. It's a whole different animal. I have some people across country that I lean on if somebody.
We don't even need to touch on annuities.
But that's just
Let's
a
not
different
do
beast.
that. Yeah.
But so most of my, an advisor calls and wants to know, I have this client, they need insurance or they have this policy. What do we do with it? What's the best route we should take? What options do they have? And that's usually where I get started on that.
Yeah. So when someone comes, like a lot of clients have sent your way are, 20s, 30s, 40s, and usually are thinking about this for the first time. Like maybe they have a policy through work. If they're not self-employed, a lot of people are self-employed. Like what are the different types of policies that one would want to have, and when would you want to start carrying those?
The biggest thing, the hardest thing with the insurance business is it's never going to be less costly than it is today, because you're the youngest you're going to be, right?
Today's the best price you're
going to get, and it has nothing to do with a sales thing. That's all based on the carriers base a lot of your price based on your age.
Yeah, because they calculate it based on your age.
Based on your age. How much
it's
do you want?
The biggest factor.
How long do you want it? And how old are you? And then the final thing, how healthy are you?
And are we talking about life or disability or both?
Both. Okay. Both. Overall, that's the 30,000-foot view. So when do you buy it? Most of the time I tell people when they have something they're worried about, if something were to happen and they worry about losing, financially supporting, things like that. So when you think about that, think of the big moments in your life. You buy a house. You get married. You have a kid. Like those are big events. That's life insurance.
You would recommend. So I usually suggest, especially when someone has a kid, all of a sudden they really should have life and disability. Do you think there's a case where people should have that before?
It depends. It all depends on the person's risk tolerance, and so I don't think that you necessarily need it. I'm just saying that's usually when the conversation starts of, hey, we're getting married. I'm worried about my spouse because I'm the primary breadwinner. Something to that effect.
Let's take a step back and explain what they are actually. And I'll share just a little story of like when it became obvious to me how important it was. My father passed away 12 years ago. And my mom would have kind of been screwed without insurance policies. And I honestly thought, like I knew that my dad had these policies, like as he was getting his estate in order. And I honestly, based on like my experience with health insurance, was like, I'll believe it when I see it that this money's actually going to show up. And it was a lifesaver. I thought, well, it's going to be up to me and my brother to take care of my mom from now on. Yeah. And the policies, they just paid out. It was no big deal. And it just really illustrated how important it is to have those policies. Even like, my brother and I were both grown adults, self-supporting. So it wasn't like we needed to be put through college or anything, but my mom still needed money to live the rest of her life. She was still, quite young and had a lot of years ahead of her. Mm-hmm. But, what is a life insurance policy. What is a disability policy?
Great question. So with life insurance, there's two main components. There's term life insurance, which is basically you're buying a policy for a period of time. Typically, it's sold in 10-year chunks, so 10, 20, 30. So you buy $1 million just for round number sake.
Nice. I love nice round numbers.
$1 million
We'll come
for
back
10
to
years.
how much?
$1 million for 20 years, $1 million for 30 years. And
so if you die in that 10,
in that
20,
period,
30-year plan, your beneficiary, the person who you designate, gets $1 million.
Gets $1 million.
Got it.
Now, there's all kinds of calculations into how much, how long, and that's a little bit more complicated, but it's not. Term insurance is designed to be relatively simple for the consumer to understand. You buy it today, $1 million for 10 years. If you die within those 10 years, the death benefit pays out to your named beneficiary on the policy.
Are there taxes on that?
There are no taxes on it. This is now, unless you deduct the premiums, which just don't ever do that. So nobody does. It usually happens by mistake. If it happens, all that stuff. Just don't do it. But it's designed to be tax free. Okay. And then the other type of life insurance is permanent insurance. Typically, this is called whole life because you got a lot of big carriers that are really good at marketing. That's their bread and butter. And there's nothing wrong with those carriers. Nothing wrong, but
it's called like whole life because it is for your whole
life.
You will be paying into it your whole life. But no matter what, you will eventually die, and your beneficiary will get
that money.
Okay.
So if you buy a term policy, that's going to be probably the lowest cost option on the market.
Okay.
That's going to be your cheapest. Okay. But the caveat to that is when that period ends, it's over. So there's that risk of it. Did I save enough money? Well, I don't need insurance. The goal being self-insured. With whole life or permanent insurance, because there's universal life, index universal life, and I don't think the purpose of this is to go into those.
Yeah.
But there's other types.
But people might have them and not even realize it or understand what they own.
Right.
Yeah. But anyway.
But the purpose of those is no matter when I die, as long as this policy is still in force, when that happens, my named beneficiaries will get that money. So the $1 million for the rest of your life, and you pay interest. Now, the big caveat with that is they're a lot more expensive because, again, the design is to have it for the rest of your life.
And you will definitely die at some point.
And you will
so they need to
for sure die.
Yeah.
And so they're just a lot more expensive. It doesn't mean that they're bad policies. It just each one has a different purpose. And what I say, these policies were designed where there's a defined purpose for each one of them. It's just what is your situation and what makes the most sense for your plan. And that's what I talk a lot about with clients is what is your plan? What does the advisor need to fulfill that plan and protect you financially in case something happens? A lot of clients don't need permanent insurance. Most clients don't.
Okay.
But there are reasons why. You have an estate tax problem.
That's the one. That's like the one time I've seen it. Like if you're worrying about estate taxes, then you probably have advisors
that would stuff because it's an efficient way.
Yeah.
But there's other reasons out there, but that's probably the main one. But most people, term insurance is the best option for them. Now, disability. Disability covers you if you're injured or an accident off the job, because if you're hurt while working, that's workers' compensation. In most scenarios, right?
Okay.
But if you're injured while you're playing, and this is the one I joke about, you're playing basketball with your kids and you rip your knee up and you have to have surgery. I wasn't playing with my kids, but that's what really happened to me. That
could be potential. By the way, we're just really glossing over that.
Potential disability claim. But most of the disability claims are heart, cancer, or bad car accidents. Those are the three of the big ones, right? People don't realize.
So you live, but now you can't.
But now you can't work. And the doctor's telling you need to stay home and recover and take care of yourself. And so what's going to do that? My father was an example of that. He had a heart attack at 54, prime earning years.
Wow.
And he was owning his own business.
Okay.
And so a disability policy kicked in to help him recover so that he could take the pressure off of earnings, right? And so a disability policy basically kicks in. Usually it's a 90-day elimination period, meaning you file the claim. I had the event happen, the heart attack, right?
Yeah.
3 months, and then the carrier typically starts paying. That's, again, high level. I'm not trying to get in the weeds.
No, that's very important. That's not weeds. That's important to understand. It is my understanding is those are long-term disability policies.
Long-term disability, yes.
Because you should have your emergency fund to cover those 90 days, that 3 months, and then the policy kicks in. And how much do they cover? Do they go on forever, or how do they?
Great, yeah. So at underwriting, the carrier determines how much you're eligible for, and it's all based on math. So how much do you make? Do you have any other disability policies out there that you could, if something were to happen, you could file a claim on, and they say, okay, based on this is what you're eligible to buy.
Okay.
Then it's up to the consumer to decide how much do you want to buy.
Okay.
And usually the financial advisor is involved in that conversation saying, we need this to support the plan. Because obviously the more you buy, the more expensive it's going to be.
Right.
The less you buy, the less it's going to cost.
I always hear 60% of income. Where does that, am I making that up? Where is
No,
that?
65% is kind of the thumb, just because of taxes. That's usually, because a personally owned disability policy comes to you tax-free.
Oh,
so they're
okay.
trying to make you whole, saying like, let's say you make $100,000 a year, so $65,000 is your net. Okay. They're trying to cover that, give or take.
Okay.
That because you're getting it tax-free, right? There's no taxes.
I didn't realize that.
Yeah.
Okay.
So
I've
that's
always wondered, 60%. That's super helpful, but it's not 100%.
It's not 100%. It's all
so
around taxes.
Okay.
And again, the carriers don't want you making more money on disability claim than actually working. So there's also trying to drive
sell you a policy that's more than what you make.
There are some ways where they don't correlate. The carrier will not directly do it, but if you own a policy prior to an event and you buy a new policy, they don't see each other. You could technically have more. Again, there's a.
I'm just.
Not me.
Don't try to do that.
Yeah.
But the. So yeah, a lot of people, in my experience, we get asked about life insurance a lot, and we might educate people on term life insurance, but for younger people, working people, disability, in my understanding, is much more likely. The odds of someone becoming unable to work due to one of those scenarios is much more likely than them dying unexpectedly.
Especially for younger clients, it's the highest likelihood. Again, we're playing the odds here, and that's why you're going to see more. It's going to be more expensive than your term insurance because the likelihood of it happening is just greater. Okay. Unfortunately.
So when we're working with someone, when we start bugging them about that, like usually the people that we're suggesting go get these kinds of policies, like they're already got their budget under control. They've already got an emergency fund. They've worked on any of their big goals. And now they've been thinking a lot about what sometimes is called upside, like building their financial security, building their wealth, and then they realize like, oh, I need to protect this. So it's oftentimes you might hear someone say protecting your downside, and so we would say hey, you've bought your home, you've had a kid, you've started your own business, whatever your big goal is that's been taking up all of your time and energy and money. All of a sudden realizing oh, I could lose this. Mm-hmm. All my hard work, I need to protect it. So it would be ideally everyone would have it right away, but usually kind of as you were saying, someone realizes they might for the first time in their life maybe have something to protect. Mm-hmm. And so when we're looking at it, often it's around do they have kids? Is one person, especially if one person in the family is higher earning than the other, so it would be harder for the other spouse to make up the difference if all of a sudden the main source of income was gone. Mm-hmm. So when we're looking at it, we're often are you making sure that you can keep paying the mortgage, send the kid to college, and make it so that the spouse who's already having one of the hardest things to ever happen to a person at least can maintain some quality of life and take care of the family. So when we're trying to figure out, honestly, when we're trying to figure it out, we've sent them over to you and you help them figure it out. But it's what is that the kind of scenarios where you think it's definitely time to go do it? And how do you figure out how much? Because you can get $100,000, $200,000, $1 million policy. What are this is for educational purposes only. Yep. What are the factors that go into deciding how much of either type?
Yeah, when it comes to life insurance, there's
that's a question I get a lot.
There's some rough calculations you can do off, how much do you make? And then how long, if something were to happen to you, how long would you like your spouse to receive that income for that period of time? So sometimes you say, I make $100,000 a year. Okay, well, you have to get taxed on that. So let's say it's $80,000, right? Okay. Let's just keeping around. You'd think I would, but I've always forget. I just the number. They really need 80. They don't need 100 because it's tax free. And so then I want to replace for 10 years. I want $80,000 for 10 years. Okay, that's an $800,000 policy. So $80,000 times 10 years. And again, that's very high level.
For a second, I was really impressed how quickly you did the math. I don't do math. 80 times.
So, and that just kind of gets them thinking about it. Now, there's more complex calculation you can start to dive into, and that's like a human value need calculation, basically.
What is that?
So basically, helping a client understand that if they're 30 years old and they make $100,000, what the value of their earnings over the rest of their life would be if it happened sooner rather than later.
So if I'm 45 and get hit by lightning, my next 20, 30 years,
you just lost, your spouse and family just lost that amount of money for this. And you can calculate those, and there's some, and again, it's not hard and fast, but like give it a ballpark in that. And obviously people get a little sticker shock when they see that they could be, depending on how much they make, it could be $4 or $5 million, like that. And like, wow. And they will think about it.
If you're making
this much money over this
a year times 20 times 30,
you're not counting increases, bonuses, changing job. You're not counting like your lifetime value is X. They're like, wow, I'm worth that much money.
Yeah, because like right now I'm worth nothing.
Yeah, and they just don't. Now, does it mean that they're buying that much? By the way, typically they don't. Okay. But again, it just starts to set the table of like, okay, well, this is, and then you start talking about risk tolerance. How much do you want to bet on yourself versus pushing this off to an insurance carrier?
Yeah.
And then how much you willing to spend on that. So it's just going through that, and where the end result comes down to is back to, okay, ballpark, here's how much this is. Oh, by the way, the financial planner, somebody like yourself, is usually running the plan saying like, here's what's, if it were to happen, here's what absolutely needs to be covered.
Yeah. So when Phil and I, when I send a client to Phil, oftentimes I'm looking at my client's budget, seeing what they have available in their budget, and like it's the balancing act of, what do they need, what can they afford without ruining their budget or taking away from retirement or other big goals. It's a balancing act. Usually, like, term policies are often very affordable, like surprisingly affordable. Because sometimes people get a little mad because they're like, wait, if I don't die, I don't get anything? Well, that's good. You didn't die. Yeah. And but they're like surprisingly affordable, especially like the younger you are. One thing I learned that I just want to share, and maybe you can like elaborate on it, is a lot of times people might be encouraged to get insurance earlier because it's so much cheaper, but also, isn't it true that if you've had insurance, it's much easier to maintain insurance versus if you wait and then something happens and you develop some chronic condition versus if you had a policy the whole time, like maintaining insurability?
It
Is
can
that a thing?
be. Well, there's
something I learned in class.
No, there's obviously, if you're young and healthy, or even if you're older and healthy, there's an insurance carrier that's going to give it to you. Now, how much does it cost based on your age? That's subject to the carrier and all the questions.
Okay.
But if you have a policy, and let's say you bought it when you were younger, and you developed a condition while you had it, a lot of term policies have something called a conversion right or privilege, and that means
what does that mean?
Yeah,
converter, writer,
or privilege. So at some point during the life of the term policy, let's say you bought a 20-year term policy, right? Okay. The carrier will say, up until the last day of the policy, you can convert some or all of this death benefit to permanent insurance without any medical underwriting. It's all paperwork. Okay. Because we approved you at 25 at preferred. Okay. We'll give you that preferred rating, but what we'll give you at the age you convert. So let's say you wait to the end at 45. So they'll say you can have a permanent insurance policy at 45 for $1 million at preferred underwriting class, and we will not look at any medical files.
Okay, that's a big deal. This is, I think, a helpful story. My partner was getting a life policy through her work. She got a certain amount. There was an option to buy additional, and so there was a default for the partner, being me, and we wanted to go up. And so, but in order to go up from that number, which was still like a relatively reasonable number, it went from like $50,000 to $150,000 policy, teeny tiny policy in the grand scheme of things. It required getting into my medical records, which like on its own was like kind of intrusive already. But what happened was they needed something from my doctor. They had a question they needed to ask the doctor. The doctor never replied, and I got turned down. And I couldn't get through to the doctor. I couldn't get answers. So there's a big difference between being able to just get a policy versus having to get a medical exam or records, when do they, when do policies like require digging into your medical history versus just like filling out paperwork?
That's a great question, and it's changing because the carriers. And here's where it's changing: how much, how old, how healthy. Okay. So a lot of carriers now, and COVID actually pushed us a little bit because they were trying to get somebody out to do an exam to the house. Like, they were like, you get that person away because everybody was worried about that. So the parents had to get creative.
I don't want someone, don't bring me COVID while I'm trying to buy
and they didn't know how serious COVID was. And it's very serious for some people. And for some people, it's kind of a cold, right? It
could kill you or be inconvenient.
Yeah, and the carriers at the time were like, well, we're not taking the risk. Yeah. We're going to go this route with it, right? Yeah. Nature of their business, right? So
someone did the math and figured out it made more sense
to just let them do it. So a lot of carriers, if you're doing $1 million or less and you're relatively young and healthy, again, when I say relatively, it all depends on the carriers with age limits. And you answer their online questionnaire, most of them are doing it online now, and there's nothing that raises a red flag. Now, they will check your prescriptions to do your Social Security. There are methods that they check some things on to see what's going on. So they have their ways from an actuary perspective to check that. And you get through all that, and there's no red flags. They may just say, "Okay, you're approved. We're done. We don't need any more information." Because by the way, this is for term insurance. Right. But if you start to ask for more insurance, a couple $1 million up to some carriers, you get over $1 million, and they're all right. We're going to do an exam. Just so
they usually have like a numeric number where they're like, "Okay, we want to know more.
We want to know more because if we're going to commit this dollar, we want to know what we're getting into."
Okay, that makes sense.
And then they may do an exam. I agree with you. Sometimes one of the more frustrating parts is the medical records. The exams are not that intrusive. It's a little bit of blood. It's a little urine. They ask some medical questions. They're in and out of your life within 20, 25 minutes. It's not too bad.
A little blood, a little urine. No
It's a nurse that comes to your house. They're really nice.
That's one reason I've always avoided it, because I'm like, I don't have time to like.
They come to you.
They come to you.
They make it as easy as possible.
Oh my god, that's hilarious.
But the medical records can sometimes be very difficult because you got to get a doctor on it. You got to collect them. Oh wait, this doctor didn't explain that well.
Other things to do.
Yes.
Yeah.
And with COVID, one of the things that got really difficult was mental health, which is a good thing, is becoming a lot more acceptable in this country of being able to use those services.
That's good.
But that profession has been just inundated, especially because of COVID. They've been some of the most difficult ones lately to get the medical records because they're so busy. They've got so many clients and they're going back to back to back. It's been really hard.
So responding to questions from an
insurance carrier, like, I don't have time for this.
To-do list.
And so some of my cases have taken months because we're waiting on the mental health professional. And it's not them being mean. It's just that they can't.
They got other stuff to do. Yeah.
And so that can be challenging and frustrating for a client. And candidly, there's nothing they can do because the carriers are saying, "Well, we're not going to approve this until we know what's going on." And because they're putting millions of dollars on the line, if they get it wrong, they could be in trouble for that, right? So they want to make sure it's right.
Okay.
So,
but it's usually a numeric number. It's usually so when you're figuring out how much insurance you need, you might not even need that much. So I think a lot of people assume there's going to be a medical exam, and they might avoid it because they don't like talking about it.
Right.
But often a numeric trigger is what does it, and as long as you're not asking for, over $1 million or whatever the trigger happens to be, you'll probably just be a matter of paperwork.
It could just be paperwork. It could be just a simple telephone call with an underwriter. Instead of doing it online, they just do a 20-minute call with an underwriter, and they're done.
Yeah, because it might even less than the cost is the trouble of it and the feeling of intrusiveness and people not wanting to talk about their health or what it would be happen if they got hit by a bus. I wanted to ask real quick if you'd explain what an agent is, what you should look for in one, and just what got you passionate about this stuff.
Thank you. My world, I'm an insurance broker, so I'm carrier agnostic. My job is to find the best opportunity for the client. I built my business model to work with financial advisors. Gotcha. So 98, 99% of my clients come from people like you. I would say the 1% to 2% are families and friends that in the neighborhood, right? They'll ask me, hey, can you help me out with this? So everybody else comes from that channel. I prefer this model because it's coming in tow with a financial plan. Yeah. I'm not saying there's a lot of really good life insurance agents I've met across the country.
Okay.
But doing the whole plan and determining how much and why and this and the subjective elements that come in with the financial plan helps round out the picture when you're putting insurance in force. There's a lot more conviction behind it. There's a lot more purpose behind it, and usually people are a lot more passionate about. You want to know where my passion came from? That side of the ledger. It was being kind of a nerd and wanting to know the math of why
you can be a jock and a nerd, people.
I try. But why this and why that? And then, unfortunately for me, I grew up. My family's been in insurance. My brother's an actuary. My dad has been in insurance.
Actuaries are magicians. Like, they're the closest thing to a magician.
I've just been interested.
That's cool. I didn't know that.
Yeah, it's always been interesting to me. And so then you bring the financial planning perspective to it that I enjoy figuring out, and you try and put those two together. And then the final piece for me, I've always been, you and I were talking about this at lunch, client stories about how did they do this? Where are they coming from? Where it's like, that's been my favorite part is learning that. And like, okay, we got to figure out how to put the insurance in place, or I help them figure out why they don't need insurance, because that happens a lot.
It can be nice to be like, you don't need this.
Why are you
Save
doing
your
this?
money. Go do this other thing.
Don't do this instead.
Yeah.
And that's the other thing I talk to clients about is like, not everybody needs insurance. I do believe everybody needs a plan. That is not just a plug. That is like how I believe that to my core. You don't need insurance, but you do need a plan.
Yeah.
So I'm passionate about it for that reason. I've also seen it where, in this world, where in your scenario, where you're a fee only scenario, in this confusion in your side, like, well, these clients still need insurance. Who can I go to? I saw that early on in my career, probably about 3 or 4 years in, and was interested in like, well, let's build a platform for those people to have a soft landing spot so they can actually have a conversation. I don't charge fees to have conversations. I only make my money if somebody buys something. And some people will say, well, where's your motive? Like, well, I have your fiduciary over my shoulder making sure that it's right. And then, so I've got a watchdog, and hopefully my intentions always remain true. Yeah. That's my goal. But I'm more interested in trying to make sure that it's right for a client. And if they buy something, they do. If they don't, it's okay. Yeah. At the end of the day.
Yeah. That's awesome. Do you have any, where can people find you? And do you have any parting thoughts?
One, I appreciate you doing this. It's kind of fun again.
Isn't it? Come over again.
And so I appreciate it. So I'm here in Austin, Texas. My company, Advanced Benefit Solutions. You can look us up online. You can find us on LinkedIn or whatever. Or you can find me through your financial advisor, which is my more preferred method. Because I usually go, okay, who's your financial advisor? And I have to circle back around. It's just easier. So I appreciate that. Here's the thing. Hopefully, whoever you work with when you're working with insurance, hopefully it's a very comfortable conversation. My job is to make it a really comfortable conversation.
Vibes are everything. If someone gives you bad vibes, if they just seem like they're trying to sell you something, if they're not relating to you as a person, how are they going to, do what's right for you?
We're also human beings. We're not perfect, right? But the intent is there to find you the best thing possible to fix your scenario.
Yeah.
And sometimes that is giving you the advice of, you're fine. You need to you can check this off the list where you're done.
Yeah.
And so,
Fantastic.
and I'm okay with that. So if you're working with somebody, get that feeling. And then I would say if they're looking at selling you whatever insurance type, make sure that it comes in tow with them doing a good analysis on what your needs are and where, or the financial planner is in tow to say, we've done the analysis. Here's the overall structure of the needs. Here's the range we need to stay in with what we're trying to solve.
This might be kind of a big question. When would someone work with someone like you versus all the apps that people are getting advertised out there?
Yeah, that's a great question, and I appreciate and applaud. You and I are also talking about tech platforms and things.
I love tech software.
I love them too. Yeah. I'm working on things to make, but
it says a lot that I tend to get people with humans, with brokers, with agents, rather than saying go to this app and just plug some stuff in.
There's nothing. I appreciate what the apps are doing because they're pushing my industry to get better, faster, stronger in these scenarios. So I love that they're doing these things. The one element that sometimes can be lacking, not all the time, sometimes can be lacking. My job, in one of my other jobs in this world, is to be your advocate if there's something going sideways when it comes to your health. For example, each carrier has their own underwriting guideline. If you go to, I'm going to pick on Lincoln Financial, John Hancock, the big carriers out there, they have certain sweet spots that they like. If you have high blood pressure, there's certain carriers that are more apt to that than not. They have different data that they're working off of.
Yeah.
When you go online to these apps, you may plug in, I'm a 45-year-old male, I feel like I'm healthy, my height is here. spits out preferred, but you're not mentioning anything about blood pressure,
right,
you may go down the route of a carrier that may not like that, and that may change your underwrite versus the carrier right below it was. So that's what my job is. I do a pre-screen with all of our clients to figure out high level what's going on, so that when we quote the carriers, we're trying to factor that in without looking at medical records to try and protect the client. Because if you have dings, there is a credit report on your health. And they will pay attention to some of those things on the back end. Like, hey, you've gone to 3 different carriers and you've been getting declined or this. What's the story here? So we're trying not to have that happen. We want to do it right now.
Yeah.
If you've got no health issues and you're young and healthy and there's really nothing and you know exactly how much you want, you're going to get through it fine. It's going to be okay.
If you're 25, got nothing,
you're going to get through it. But if you have had a couple things, if you've lived life and you've got a couple things going on, that's what my team is here for. I have a team of underwriters behind me that we're looking at these things, and we're here to. And the other thing that shows up, doctors don't always explain what's going on clearly. Nor do they finish files all the time. So when that does happen, that's where we step back in and help talk to the carrier. Like, here's what's going on. Here's what this means. Here's what the doctor's trying to say. And if we have to, we'll help get the doctor to clarify something. Yeah. I'm not saying that these online apps don't have, but when you're dealing,
there's a difference when there's a person in them.
Yeah, and I only work with a certain amount of advisors across the country. I'm not trying to load up 5,000 apps in a year. I'm trying to do a defined amount of policies in a year. Those are my clients.
Yeah,
I care differently about this. And no offense to the apps, but they're computers.
There's a time and place for them, but there's a time and place for people. I really appreciate that. So I really like the forcing us to get better thing, because that's something in financial planning that we also think about is like, competing with computers. Like, well, we should be better than computers. If they're not, go use the computer. Thanks, Phil. This has been. I learned a lot today. So again, I'm Lewis Weil at Money Positive. You can find us at moneypositive.com. Lewis, Lewis at moneypositive.com. Reach out to Phil Seibel. If you have questions or if you have any, you can send them and I'll get you in touch with them. Thanks again. Thanks for watching.
Thanks for having
Money Positive. And have a great holiday season, y'all. Adios.